High mortgage rates are going to cause Singapore property prices to drop. Let's talk about this today. Recently, there has been this article showing on the Business Times. It says that Fed about to not a rate cut as job growth moderates. Looking at this is just telling me that the Feds are trying to stimulate the financial markets again. And why do I say so? Because in June 14, it says that doors open for multiple cuts this year despite Fed's move to hold rates steadily, still in line. Gold hits fresh records on hopes of Fed rate cut, rising haven demand, and a Fed's hawk will fly lower. That is on May 11th. And then if you look back, right, slightly earlier, right, on May the 9th, right, it says that Fed official expects US rates to be on hold for extended period of time. Within like 4 to 8 quarters, right, they have been saying that the rates will go up, the rates will go down, the rates will remain and whatnot. And many of the articles may seem contradicting to one another. Sometimes I've already given up on what the Feds are trying to talk about. Today with this article, right, many of you may be thinking and hoping that the interest rate will really cause the price to go down, depending on which side you are on. Like for me, I'm currently invested into properties. So would I hope that the interest rates will go down? Of course. Would I hope that the price will go down because of the higher interest rate? I doubt so, but I don't hope so as well. But however, today if you are a consumer and you are thinking that, hey, the prices may go down, and you are waiting for the prices to go down because of the interest rate, you must watch this or share this with your friends. Because today, what I'm going to do is to decipher this article. And in order to do so, number one, I'm going to do the TLDR version of this article. I read it so that you don't have to. Secondly, looking back at history to see how the property market reacted to high interest rates environments and whether the price go up, go down or maintain, so that you as a consumer, you know what to do. Last but not least, I'll give you my opinion on today if I am a buyer or a seller, what I will be doing in today's market. Now, before we go on, if you appreciate videos like this with open sharing, do me a favor by liking this video because it's going to help me a great deal. Thank you so much. And this article, right, honestly, from an average Joe like myself that only knows about buying properties and also investing into stocks that I believe in and buying T-bills and buying insurance policies. After I read through, right, analyst says that there will be a rate cut. All in all, if you ask me, right, correct me if I'm wrong, most of the information here are just telling us that nobody at the end of the day knows whether the rates will go up, go down. Nobody can guarantee. And spoken to some of my clients who are working in the banks, they say that the upcoming cut is almost guaranteed, but end of the day, nobody will know because right at the beginning of this year, the Fed said that they will be doing 3 rate cuts at the start of the year for this year, right? And shortly, I think within 1 or 2 months later, they came in and said that they are going to put on hold. So no one's going to know what's going to happen in the next coming months. But all in all, I finished reading through all these articles already. All it's saying is that all the different banks in the world will likely be cutting rates, but there are also risks of increasing rates. So what's the value of this article? Let me know in the comments. All in all, to me, buying properties is a very simple process. As long as your TDLR can match, your down payment is sufficient, and you have sufficient buffer for rainy days, right? The interest rates movement will only affect the market, especially the financial markets. If, for example, you are trading in the financial markets or you're buying forex and whatnot, maybe yes, or you're buying cryptocurrency, yes, it will affect the market, but in the very short term and even in the long term. But when it comes to buying properties, right, especially when you're looking at Singapore properties, it's a very, very different climate altogether, which in the next segment, right, I'm going to share with you historically how did interest rates affect the property market, whether the price go up, go down or maintain. Let's talk about it now. Now, before we talk about how the market reacts to the high mortgage rates environment using the historical charts, right? Why do you often hear people tell you that the interest rates will cause price to go down? It's for a very simple reason. It's human psychology. Why? Because today, if you are 40 years old and you are thinking of buying a property that it costs you $2 million at a 75% loan, 25-year loan tenure at 2% interest rate, we are talking about $6,358 for your monthly mortgage. But if let's say the interest rates are actually at 4%, we are talking about $7,918, which is a whopping $1,560 difference in your monthly mortgage, which could potentially be the installment that you're paying for your car, for your child's preschool school fees. And it's very normal when you do the financial calculation and you see that, wow, it's 7,900 plus. Your mind will tell you, hey, maybe no lah. Why? Because the fears are high. Now, before we look at the facts and figures on the historical charts, interest rates versus price, let's first talk about why today many people will tell you that interest rates are going to cause prices to drop. And I realized that one thing, today if you go and Google or you go to YouTube to look for real estate gurus that talk to you about buying properties and whatnot, you only see a handful of them and not so many of them. But when you look at the financial gurus that people talk about your finances, how you trade stocks and shares and whatnot, right, you see a ton of them. And why? Because for a very simple reason is that the audience for financial markets are a lot higher than property markets for a very simple reason. Because today when you have $1,000, you can buy crypto already. But today as a property buyer, you obviously need a certain level of wealth, like 4 to 500,000 worth of cash plus CPF in order to be able to afford to buy a property, which in today's context, the market is a lot smaller. So for the financial gurus to create an audience from finance related things versus property related things, these people will be all around the shop. So today when you search about mortgage and all this, right, they'll all be telling you that the price will drop because of high interest rate. But if we look at the fine prints, if we look carefully, right, it's more related to the stock market. And the reason why I'm saying this is because only 22.2% of you are subscribed to this channel, which proves me right. So if you have not already subscribed to this channel, please do so right now. Thank you so much. So this research was done by UOB Private Bank, and the vertical bar means the index since the start of the tightening cycle, and the horizontal bar basically means the time lah, how many quarters since the tightening cycle. And you are able to see very clearly, in general, right, you won't see the property prices of Singapore real estate really go down drastically due to the tightening rates. And in fact, right, most of the time you will see gradual acceptance of the interest rates, and eventually the price will still go higher as compared to the starting of the cycle. And the only few times that you see a gradual decline in terms of pricing was in the year 1983 and to 84, and also 2015 to 2019. And 1983 and 84, I would think that is an era of total irrelevance, because back then 1983, 1984, I was just born only. Then you ask my parents, right, they don't even know what is interest rates. They don't even have smartphone. They don't even know how to use the computer. Why would we even use that kind of data to go and compare with today? A closer relevance will be since 2015 to 2019. The more drastic change in terms of that period was actually the cooling measures that caused the price to taper down, because that was the time when most of the property speculators who are buying multiple properties without ABSD and the land bankers were causing the price to be overly inflated. These people were out ever since TDLR and ABSD were introduced, and back then the property price was actually normalizing to the normal times where each person only owned one property. And if you see, right, and even as the price has gone down a bit, right, it went down by less than 10%, only like 4 to 5%. And can I say that it didn't go down? I cannot say so. However, is it substantial? I wouldn't think that it's worth waiting for 2 to 3% correction in terms of price. And we'll talk about why later on, looking at this current market and looking at the historical trends, right. High interest rate never caused prices to tank. So if anybody that tells you that high interest rate is going to cause price to go down, maybe this person is speaking out of fear. Because when you do the calculation in terms of a $2 million property, if you're at the age 40, at a loan tenure of 25 years, basically, right, your monthly installment versus 2% versus 4%, we are talking about $1,500 difference, 6,000 plus versus something close to even $8,000. And many people will make remarks out of fear or out of logic. Because today, if you use logic to go and apply, did interest rate cause price to go down? Is no. But most people, when they see that the affordability is low, the fear tend to be high. And many times, the remarks they make are totally not relevant. Next chart I'm going to show you is the correlation between the interest rates and the property prices. One thing is very, very clear is that 86% during low interest rates environment, the affordability becomes higher and the interest for property will be renewed once again due to low borrowing rates. And you can see over here, ever since quantitative easing in 2008 and 2009, right, property prices surged 86%. And if you look over here, it is from a time frame from 2008 to 2015, and 7 years, right, you've seen 86% growth. And some people will tell me that, oh, so every year increased by about 10%. Wrong, because back then to buy a property at $1 million, you just need to pay 20% down payment and 3% stamp duty, which is 23%. With 23% down payment, you make 86% profit. What is the actual gains? It's close to 400%. And you divide it by 7 years, right? Every year we are talking about a 50 to 60% growth in terms of pricing. And before you come in and scold me and all these things, this is just an example to help you understand that today when you're buying a property, right, you are leveraging 3x. And in today's context, it's about 1/3 lah, which means you pay a 30% down payment to own a property. And when the property increased by 30%, right, can I say that you are making a 100% profit on your money instead of a 30% gain? If you understand what I'm talking about, let me know inside the comments on what you think about this. And even during COVID season, when the Fed decided to reduce the rates during the COVID season, right, look at the price. Within like 3 years, the price surged by 54%. And some people will say that, oh, it's because of the supply chain disruption and not. It's multiple factors, bro. It's supply and demand, yes, one thing. However, the low interest rates was also one of the major factors, because that was a time that you can see interest rate at 1% and below 1%. And just now we say that you buy a $2 million property, today at 40 years old, your monthly installment is close to $8,000. If you look at the interest being at 1%, right, you're just paying $5,653 versus $8,000. You're saving $2,500. It's more than your car installment. And when you amortize, right, your interest that you're paying is only $1,200. And the balance installment that you're paying, right, the balance of the $5,653, which is $4,400, is actually your principal repayment. And if you know your math, right, principal repayment is literally saving money inside your bank because it's paying off the loan that you owe. But the interest is only 1,250. So will the market surge because of that? Common sense lah. All in all, based on facts and figures and historical charts, there's nothing to worry about as a property buyer. However, if you're trading stocks and shares, it's a totally different story. Now, I always fall back to my 3 golden fundamentals, which is number 1, always start saving and invest early. Secondly, constantly upgrade your asset net worth by upgrading as soon as you can. Last but not least, try your best to have a 20% buffer to tide through difficult times. Today, if you're a seller, what's your current profile? If you are someone that's selling cash out and take your money, you're going to just enjoy life, right? I don't think there's a need for you to panic and rush into selling. Why? Because with the interest rates tapering down in the next couple of months and the economy still going strong, right? I think there's still a bit of room for price to appreciate over the sustained period of time. If you're a seller and thinking of selling to upgrade to the next asset class, I wouldn't think that waiting is a good idea, because today, if let's say you bought a property at 1.2 and it's worth 1.6, you're thinking of upgrading to a $2.2 million property. Yes, maybe after 1 year's time, you may be able to see a 10% increase in terms of your current asset, which is 160K. However, you end up be paying 220K more because the other property also went up by 10% and it's a $2.2 million property. Find something with a reasonable amount of capital upside and then sell this current at slightly above market rate. Don't need to be record price. Why? Because when you hit record price, means you'll be paying record price for the next house. If you are a first time buyer, my fundamental is very simple. Buy what you can afford, hedge yourself against inflation, start saving. You have already saved the amount of money that you have to buy this property. Why are you waiting to save even more? Buy yourself something that you can afford at this point, maybe a 2-bedroom new launch property in the OCR area. Don't need to worry about the location. Why? By then, if you have a girlfriend or you have a fiance, you probably need to sell this off, combine your finances and buy a 3-bedroom closer to town or closer to your parents. So don't need to worry so much. But I'm not saying that you can just buy anything. If you need any advice on the new launch that you're looking at, this is my number. Feel free to give me a call. Happy to give you my advice. All in all, buy something you can afford instead of waiting to save enough. Last but not least, if you are someone that has already sold your property, maybe back then you bought an OCR property at $1,200 per square foot, which is a Park Rivera. You exited at about $1,600 per square foot. You took maybe 400,000 proceeds with 500,000 CPF, right? You have 900K and you are sitting on the fence thinking what you should be doing. Why? Because you cannot accept the new launch property prices at $2,000 per square foot. Ask yourself this question. Back then, when you bought the $1,200 per square foot OCR property that's not near MRT, did your friends say that you overpaid? The answer is an absolute yes. But when they came for your housewarming and the price is at $1,600 per square foot, the same friend that asked you, why you buy so expensive, now tell you today on hindsight, I should have bought together with you back then. You have foresight But no it's just because you look at the longer term as compared to them, they look at the shorter term. A lot of baggage. They are using fear to make a decision. But in a nutshell, find something in the OCR area or the RCR area that is slightly cheaper than your other counterparts. But not saying that as long as it's cheaper is better. Like I said again, if you need my advice, give me a call because the video is getting too long. So as usual, like, comment, subscribe, turn on notification bell because we post weekly new real estate videos like this. So with that, all the best in your property investment. Don't sell if you don't have a purpose, and I'll see you at the next one. Bye.